We'll get started in just a couple minutes. There's still a few people trickling in. So let's just give it about one more minute and we will get started. If you are interested, the full presentation from today is available as a handout from the GoToWebinar thing. Should be docked somewhere on the left or right side of your screen. You can see handouts. You can ask questions. I don't know if I'll get to too many questions today because it's the lunch hour. I want to get through this fairly quickly, but we're real excited. The earnings season is about to begin. There's a few names trickling in right now, but for us, the week one starts on Sunday. We're going to put out our first Sunday earnings sheet. And so we've got a lot of new members, and also like to review with existing members on how we can take maximum advantage of this, how to go through what LikeFolio has to offer. And so that's the basics of today. We're going to go, this is a preview. We're not getting into any specific trade examples or anything like that. This is a preview. Here's our agenda for today. Let's see if I can. Agenda for today. First off, we're going to be learning how to read the Sunday earnings sheet. You'll get this around noon Eastern time on every Sunday during earnings season. So this Sunday and then probably the next 9 or so after that. Second, we'll go through using the LikeFolio Dashboard during earnings season to help you solidify your ideas and understand more about what the company could be talking about on their earnings call. Early stocks to watch. So we do have some names to share with you just based on preliminary scans, nothing in depth, but wanted to get that out into your hands for some review. And then I think most importantly, probably the lessons that we learned from our quarter 3 results of earnings season. It was a good season. I'm going to give it maybe a B-. It certainly wasn't our best, and it wasn't a disaster. So B- I think is pretty fair. We'll go through some of those results and also some of the lessons that we learned from those. So first off, let's start with reading the Sunday sheet. The Sunday earnings sheet is something that you're going to get every Sunday, starting this Sunday, which will be week 1, and you'll get it. We send it out. We try to get it out by noon Eastern time. Sometimes it takes a little bit into the afternoon, so don't freak out if you don't have it by 3 or 4 o'clock. But the target is noon. Sometimes we just have some extra data scrubbing that we have to do over the weekend, but the target is noon. Most weeks we hit that. If you don't have it by, let's say, 6 p.m. on Sunday, definitely email me, Andy@LikeFolio.com. Sometimes when we have attachments in these emails, they can get lost or put into a spam folder or something like that. So if you don't have it by 6 p.m. Eastern Sunday, make sure you let me know. But the Sunday earnings sheet's very cool. It's our most popular product, and for very good reason. I'm going to go through what it means, what this Sunday earnings sheet means, and what each column means on this earnings sheet. And so we'll start with, let me get my drawing tools correct. Put this down here. All right. We'll start with each of the columns and just going through what you're looking at when you're looking at this. So of course, every earnings sheet is broken down by day. And so that's the upcoming week, Monday, Tuesday, Wednesday, and it's sorted by the last day to trade before the earnings report is out. So this isn't actually what day the earnings report is coming out. This is the last day that you have to trade before the earnings report comes out. For Cracker Barrel in November, this is an old sheet, so don't pay much attention to this, but this is an old sheet, but it gives us good clues what's going on. The last day to trade is Monday because they released earnings Tuesday before the market. And so that's how it's all broken down. Of course, you got ticker symbol, company name, last day to trade, and the anticipated earnings release date. Now, this can change. You guys have seen it before where a company, you think it's going to report on Thursday and they end up pushing it back a week or something like this. So this is our best guess. This is as of Sunday, when we think they're reporting earnings. We use several different sources to try to figure that out and put our best guess together. If we have a discrepancy, we normally we will put the earlier date on there so that you get into it, and if they've pushed it back, well, at least you're into a trade and you didn't just totally miss it. The next column, historical confidence. This is a really big deal, and this is where LikeFolio really tries to provide as much transparency and honesty in our data as possible, because what we don't want is people thinking that LikeFolio is the golden goose that has every answer right and is correct every time. That is not true. 60-70% correct is an unbelievable advantage to have, and even more important, it's important for us to give to you that historical confidence. And what this is based on in the historical confidence column of the Sunday earnings sheet is based on our analysis of these numbers and these calls, these bullish bearish calls, over the past 6 or 7 years and how they have performed. And so it's a scale of 0 to 10. A lot of times you'll see a 0 or not available if there's just not enough data to really draw a conclusion. But for me, I tend to take the stocks that have a 5 or higher historical confidence a lot more seriously than those that don't. I may still take some shots on some lower confidence ones if it lines up with other things that I'm seeing in the market, but this is a pretty good column to look at. First and foremost, we sort this each day by historical confidence for a reason. We want to put those that we've had the best success with up first. So that's historical confidence. I'll show you a little bit more of where that's derived when we get into the dashboard section. Q over Q purchase intent. So this is looking at the 90-day moving average, where our purchase intent data is on the 90-day moving average, where it was at the end of the quarter that's being reported compared to the end of the prior quarter, and how much has that moved. So for Salesforce here, it's just indicating a 3% quarter over quarter purchase intent growth. Quarter over quarter stock price, same thing. How much did the stock move during that same time period? For Salesforce in this example, it was down 4%. And then that's what gives us our quarter over quarter purchase intent signal, is by subtracting this PI move minus the stock price gives us our signal. And so that shows us the idea behind the whole thing is seeing how much purchase intent has moved compared to how much the stock price has moved, which is an indication of Wall Street expectations. And so it's that difference that's what makes an impact for us. It's how much our data is showing that potentially Wall Street has missed. Next, we get into year over year, and this is really, we're starting to figure out more and more that this is really the bulk of what matters in these earnings trades. And so you've got year over year purchase intent change, which is big to look at because a lot of companies are seasonal. So a 35% increase in year over year purchase intent for Salesforce, where the stock was up 31% year over year, gives us a 4% year over year PI signal. And then what we'll do to come up with this call, so this is a system generated call. When you see call here, this is system generated, completely algorithmic, and it is saying that this Q over Q PI signal and this Q year over year PI signal both agree in the same direction. And what direction is that for CRM in this case? It was bullish. And so that's the way we look through these columns. This last column is just trader thoughts. It's just me, Landon, Nick, some of the other traders in this office. We sometimes go to outsiders to look at this and say, all right, given this data and what you see with the stock, what are you thinking? It doesn't necessarily, we think differently probably than you do, because everybody's different in their risk tolerance and the way they like to approach things, and whether they use technical analysis or fundamental analysis, whether they're looking at, just an earnings trade or beyond. But this is just a good little spot. You can think of it like a horse racing tip sheet where the guys that sit at the track all day tell you what they think they're seeing. But all of this right here is algorithmically driven. It's the basis of what LikeFolio is all about, and this is what gives us our edge. And that's the basics of how to read the Sunday earnings sheet. I think that there's a couple of changes that we're making just to the columns that you'll see next. Yeah, so we're going to add a column called stock move since the end of the quarter. So, there's usually 3, 4, 5, 6 weeks, something like that, from the end of the company's fiscal quarter until the company reports its earnings. And during that time, the stock can move quite a bit, and that is not captured in this these year-over-year stock price and Q-over-Q stock price. Those are both as of the end of the fiscal quarter, and so this is a really big addition for the LikeFolio earnings sheet, because it's something that's very important. We'll get into it in performance in a little bit, but it's very important to understand how much Wall Street has already anticipated, incorrectly or correctly, the earnings report that you are about to trade. So that's going to be an additional column in the Sunday earnings sheet this quarter. So that's how we read the Sunday earnings sheet. Now, when it comes to using the LikeFolio dashboard, I'll go through this a little quicker. I think most of you are probably familiar with the dashboard. You go to dashboard.likefolio.com to log in. If you don't have a password yet, or if you've forgotten yours, click on the recovery link and put your email in, and a new token will be sent to you. But the LikeFolio dashboard, very powerful tool. It displays all of the data that we talk about all the time: purchase intent data, consumer happiness, all of that. The first thing I do, and we'll probably make this a default soon, is I always turn the daily bars off, unless I'm looking specifically at a specific set of days that I'm interested in, like a product launch. I turn this off and focus on the moving average. And so this is Canada Goose. I'll get into reading these charts, but in terms of earnings, in just a minute. But I wanted to make sure you guys knew my first move is turn daily bars off. And I also wanted to point out this area here, historical predictiveness. This is where we come up with that confidence score from the Sunday earnings sheet. And I'll show you what happens when we click on that. It's going to show us the earnings trading history for this stock. And so for Canada Goose, you can see it's been a phenomenal winner for us. We've had a average gain per trade of 61%. Now, there hasn't been a whole lot of trades. It's only been a public company since the middle of 2017, but we've been correct 100% of the time in the direction of the initial move on this company. We've predicted properly 83% of the time whether or not the company would beat or miss revenue expectations. And this is kind of a key, kind of fun point here is LikeFolio. Two things to remember: LikeFolio is basically about consumer demand, and so what we can predict and what we're looking at when we talk about purchase intent mentions is all about the revenue that we anticipate the company is generating. We have really no insight into earnings in terms of expenses. So how much money this company had to spend to get that revenue, we don't know. What their margins are, we don't know. These are all things that you're going to have to dive into yourself. And if you think that's the most important thing of the earnings call, then you take LikeFolio data down a notch in terms of how much you put on it. If you think that revenue and sales and customer acquisition is the main driver of what's driving this company, which it is for most companies, then you put LikeFolio up a couple notches. But what's really cool here is on Canada Goose, great example of we were right 100% of the time on the prediction, on the direction of the stock's initial move, but only 83% of the time on whether or not the company beat analyst estimates. And why that's important is because when you think about what we're doing by comparing purchase intent growth versus stock price growth, we're essentially saying that the stock price is a better indicator of market expectations for earnings than the analysts are. And so we can be right on the stock price and wrong on how the company did versus analysts. And I love when that happens, because it's all about what the market expects, not a handful of analysts. And LikeFolio tries to be better than both. And then we've got purchase intent correlation to revenue. Any of you statistical people out there know that 0.4 is decent, 0.6 starts to get good, 0.8 is amazing, 0.9 plus is just phenomenal correlation. So you can always look at that to kind of see how LikeFolio has done historically for this specific company. Moving on, if you want to look at purchase intent mentions in the dashboard, one thing I look at when I go into, let's look at Canada Goose right now. Let's say Canada Goose came through on the Sunday earnings sheet as a potential bearish trade because the PI signal was year-over-year PI signal was poor. I would go into the dashboard to confirm this, and the first thing that I would see is, wow, when we crossed 2018 last year, when we were at this same point last year, we were higher in terms of 90-day moving average of purchase intent mentions than we are this year. Every other year, we've seen growth. The market is likely expecting growth. Now, we have a huge sell-off in the stock. That's important to consider as well, for sure. But in terms of our prediction on revenue, we've got reason to see this trouble. And so I look at these purchase intent mentions. The trajectory of those is very important in the dashboard as I look at these earnings trades. And then the next thing I'll do, generally speaking, is look at the quarterly bars. And so at the top left of the dashboard, there's two options, the daily view, I think it's called, something like that, and then the quarter view or quarter bars. And so you can see what I'm looking at here, which is really interesting for Canada Goose. So their quarter that they're going to report is actually this one, quarter 3. All right, this last bar, you can always say is the current quarter. This is the average pace of the current quarter. And so this is the one they're going to report. So it's fine. We can say, look, they're going to report another Q3 that was better than the prior Q3. But for Canada Goose, maybe I'm thinking the company guidance is the most important part, and how they're going to run in through Q4, and is Q4 going to hold up? And now I see, Q4 kind of confirming what I saw in that last bar. At least the first month of Q4 2019, which is, I guess, their way of doing it, but the current quarter, the first month of the current quarter looks significantly lighter, or at least lighter than what the last year's Q4 put up. And so for me, that's at least an indication that it's possible Canada Goose could come out there and say sales might be a little soft going ahead, or something like that, or we're moving down to the lower end of our guidance range, and those types of things. And so that's how I use these quarterly bars to kind of get an idea of whether or not something's happening that might impact the forward-looking guidance of the call. Because what the Sunday earnings sheet shows you is the past quarter. It's going to show you what quarter over quarter, year over year, purchase intent gain versus stock price. All those things are kind of baked in and saying, here's what we think the report's going to look like on the last quarter. But then I use these bars to kind of give myself an indication of what I think might be happening for the next quarter or for guidance. And that's a lot of times very important for these companies. And so that's a powerful way to use the LikeFolio dashboard. So some early stocks to watch as we head into this quarter. I think, and again, I want to make very clear, these are very preliminary scans. No one should be going out there and buying or selling a bunch of shares of stock because of what you see here. The Sunday earnings sheets are a much more official way to do this, but these are just some early indications. Our bullish initial reads came in, or these stocks came in as initially bullish Um, Square's on there, Tesla's on there, Logitech's on there, Roku's on there, which is very interesting because of the negative attention it has gotten from Citron Research. I think Apple may have announced that they're creating a player specifically for Samsung TVs. I may be mixed up on that, but something caused a negative reaction for Roku stock. Michael Kors, actually, after Macy's downgrade today, I was surprised to see Kors on there. Callaway, good. Mattel might have, we think, had a pretty good quarter, and Expedia as well. Again, initial reads, so take them for what they're worth. Bearish initial reads came out. Netflix, unfortunately, I'm going to take that one with a grain of salt because of the way that people reacted to the Bird Box and Bandersnatch initial readings on that was just through the roof. We tweeted about it, but we'll take a look when it comes time for Netflix earnings. I think I'm going to be a little skeptical, although the stock's up $50 since those events, Bird Box and Bandersnatch. Neither one that I've seen neither one. Which is kind of frustrating to dive into the data so much and not be entertained by the product that everybody's talking about. But so Canada Goose comes up on the bearish initial read, which we just went through. So we could kind of see why that might be. Dunkin' Donuts, Amazon, which surprises me. Always when it's bearish, I always take that with a grain of salt because so many people have lost so much money betting against Amazon, and then a couple of others. I think that the initial scan, we saw more bullish consumer activity in terms of what market versus market expectations than bearish, which is the opposite of last quarter, which, if you want to really extrapolate out, could bode well for the market in general, and so far seems to be doing so. So that's an initial look at some stocks to watch. If I had to pick the ones that I'm most interested in watching, like the ones that I'm super excited to trade, I'm always excited to trade Tesla. I'm pretty excited to trade Roku. We've had some good success with that in the past, and I'm hopeful that by the time we get to the Sunday earnings sheet that it gets confirmed that this is a bullish read because the market's leaning bearish. And then on the bearish side, I think Canada Goose we've had such success with, it'll be hard to stay away from that one, but we'll have to be careful in terms of risk. And then Amazon's always fun to trade. I always trade it no matter what. And so that's that. Those are the ones that I'm initially looking at. But, this is a very small portion of the list because there's only so many companies whose fiscal quarter has ended. Some of these fiscal quarters end throughout the month of January and even into February, and then they report at the end of February. So we have to be careful. This is not a comprehensive look at all, but some kind of fun names on there already that we're looking forward to this earnings season. I always look forward to earnings season. So lessons from our Q3 results. I said before, give it a B-. I think that's pretty good. That's a pretty good grade. I'm hoping Q4 is an A+, of course, but in general, we have high expectations of ourselves at LikeFolio. We have high expectations of our data, and we're going to be as transparent as possible. And if we put up a dud in this next quarter, we'll admit it and we'll move forward. That has happened in the past, and it will happen again. We just try to make them as few and far between as possible and get as many A's and A+ in there as we can. And so with that, we want to take some lessons from what we learned from Q3, which I thought were really interesting. I got some stuff in the way on my screen that you guys probably can't see, but I want to adjust it out of the way. Really interesting on this Q3 analysis that we did. When we looked at, the last quarter was a terrible one for bullish trades, right? The market fell like gangbusters from, I think, October 1st on. So it was a really tough trading environment. Sneaking out a B- out of that was kind of a win. But The one thing that really stuck out to me on that was there was still opportunities to make money counter trend to the market. So the market's dropping, but we still had opportunities that paid off to make money on bullish trades. And the way that we filtered those down to see where that opportunity really was when our data, the Sunday earnings sheet, had a bullish signal on it, and the stock had moved down by 5% or more in the prior month or since the quarter's end. And so, in other words, the market had already discounted these stocks significantly based on general market trends, whereas the individual stock itself was showing high promise in LikeFolio data, consumer purchase intent data, and so on. And so that's a nice setup. That's a divergence opportunity. And that prior 1 month is just a really quick way to take a look at how the stock has moved since the end of the quarter. And so if you look at this, it's really good returns. If you filter down to those bullish trades where the signal was positive, and the stock moved down by 5% or more going into the earnings call, those performed really well. I'll get this out of the way, and we can see, 8 out of 11 of them were winners. We had an average profit per trade of 3%, which is really nice. We had a couple doozies in there that killed us, not least of which was FedEx, the last one of last earnings season, which still leaves a very bitter taste in my mouth. Not sure that we'll be super aggressive on FedEx. That's a tough global company for us to be calling, but that one cost us 14%. Big was a big loss at minus 30%, but you can see the rest of them added up pretty well. One of the best there being NWL, and then also got a really nice gain out of NTRI, which we were proud of. But 73% win rate with average profit per trade of 3%. We'll take that. That's a pretty cool view of and a pretty cool way to look at things. And I would encourage you, if the market's moving one direction or the other, there's still contra trend opportunities available, and you just want to look for. So if the market's moving up this quarter, we might look a little more heavily at bullish trades will take care of themselves, but on the bearish side, we just might constrict those down to the divergence opportunities, where we're only going to look at bearish trades or bearish signals where the stock is up 5% or more over the past month, that kind of thing. So we constantly want to be learning from this and understanding how the market's moving, and understanding when we're betting against a market trend, we need to have some cushion built in there by the prior 1 month move. And that's the idea behind this view. The next view, which is really incredible and really makes us think about the value of this quarter over quarter, data versus year over year. And for us, this was just unbelievably telling. So this is a breakdown of all of the trades where there was a year over year PI signal that was triple digits, whether it was positive or negative, and completely ignoring Q over Q data and the system signal, but just going purely on year over year PI signal being triple digits or more. There was 12 of those in the quarter. And this is out of hundreds of companies we follow. So not a whole lot of opportunities, but you can see the way that they performed when they came through was pretty unbelievable. An average profit per trade of 9.2%. That's unheard of. That's like one of those numbers that you see it as a data analyst and as somebody that puts out these types of things, and you really triple check it before you put that claim out there. But that's what happened. 9 winners, 3 losers. A couple of the losers were just 3% losers, and then lots and lots of big gains. And that tells me that what really mattered here in this last quarter was how the company did versus a year ago versus Wall Street expectations. And that's what I'm going to be focused on quite a bit going into this next quarter, because the holiday quarter for so many of these companies is so important. And so when you see these triple digit, and triple digits is just an arbitrary number. If you see an 80 point on the year over year PI signal plus, or anything, the bottom line is, what's cool about LikeFolio data, what I'm so proud of, is even when we're wrong or we have a bad streak, it's extremely consistent that the greater the signal, the greater the value of the signal, the more likely the signal is to be correct, and the bigger the move in the stock. And so those two things add up to me to say that you've got good data. Sometimes you get beat, sometimes you make it a nice trade, and sometimes you get a profit. But the bottom line is, the greater the signal, the greater the outcome on an average basis, tells you that your data is pretty darn good. And so that's the other way that we looked at things. So those two kind of lessons from Q3, I think, can be applied going forward. We'll be sure to highlight those as we go out into this next earnings season. The big year-over-year purchase intent movers, we'll put that in our notes, things like that. But wanted to make sure you guys were aware of that and the divergence opportunities that were happening. And so with that, I am going to shut this, close this out. I think, we're going to send out the Sunday earnings sheet on Sunday, the first one. We're going to try to do a Monday webinar going through the specific sheet every Monday after the Sunday earnings sheet goes out. And I say try because this is the first quarter we've tried to do it, and we got the same team size, so we're adding work, but we're really trying to step up the content that we bring to you guys as members and the insights that we can provide. And so look for a invitation to another webinar for Monday, where we will go through that Sunday sheet very specifically, opportunity by opportunity. I'll give my thoughts. We'll have some thoughts from Landon and Nick. Again, this isn't built for you to just follow what we do. That's not what this is about. This is about unique data that gives you an advantage into your trading style. And so you really have to embrace that, take it into your style. You have to own your trades, you have to own your gains, you have to own your losses, and be responsible about your risk taking. And that's the key to trading. There's only so much we're going to teach on that, but we can always reiterate it. So I really appreciate all of your time today. We're going to go get some pizza at a local pizza place that I've been looking forward to, and maybe a chocolate chip cookie. But this stuff is important. I appreciate you as a member of LikeFolio. I'm so looking forward to this earnings season. Let's make it an A+. Let's keep our risk low, our number of opportunities high, and have a fun time, hopefully making a nice profit. Thank you for joining me today, and we'll see you soon.